The U.S. Supreme Court struck down a federal law that has barred single-game gambling in most of the country, giving states leeway to legalize gambling on individual sporting events. Now, the decision was no doubt have a huge impact on the professional leagues in the U.S. So let's bring in our first guest to weigh in, Steve Pagliuca, Bain Capital co-chairman and, of course, co-owner of the Boston Celtics. And I've got to get your take on this landmark ruling. Is it a good thing for sports?
Well, my understanding is the ruling is actually focused on states' rights more than anything else. So we'll see how that plays out. They have gambling all over the rest of the nations, and as you know, in the UK, soccer gambling. So I think it'll play out as a states' rights ruling. Something that Massachusetts should approach? That's up to the state. You know, the Attorney General is great here, and I'm sure they'll figure out what the best way to handle it is. Interestingly, we've already been hearing from the NBA Commissioner, Adam Silver. We know that he's been a relative supporter, but saying overall we've got to ensure that the legitimacy of the sport is remains intact. But do you think that it would affect the game in any way? I think with Adam Silver as commissioner, the game has always had a high integrity with David Stern, and Adam Silver is their highest priority, and it will remain so whether anything changes in gambling or not. People want to see a fair game, and they do an incredible job at putting that on. Would you like to see the NBA take a cut of the gambling? You know, again, that's up to Adam Silver and the group. We're really focused on trying to win a championship with the Boston Celtics, and we're really enjoying what's going on right now. Let's talk about that. Yesterday, the win. It's all I heard as I got the train down from New York was the focus on phenomenal performance against the Cavaliers. I mean, what does this mean for you for the rest of the season? Well, it's only one game, but we're very proud of the team. Obviously, when you have two of the top players go out with injuries, many teams fold. Brad Stevens and the team pulled together, and a young team really has stepped up. It's a fantastic kind of Cinderella story. So I love watching it every night, and they're competing very hard. They're playing as a team, and it's wonderful to watch. What does it mean for your brand, for the franchise? Well, the franchise has been very strong before we purchased it. It's an iconic franchise. It's really more, we feel like we're stewarding the asset for Boston and Massachusetts and all of New England. And this story makes it even stronger. You know, young players coming in, looking at those 17 banners up there, one of which was on our watch, really inspires them. We have a fantastic coach, a fantastic general manager, Wick Grosbeck, you know, I think the best CEO in sports, and co-owner. So things are looking really good right now. We knock on wood or glass and are hoping for the best every night. LeBron is, you know, transcendent player, and you can never count LeBron out. This was one game, but it was off to a great start. Let's talk about stewarding assets closer to home. Let's talk about the investment side of your focus, and particularly when it comes to cyber, chips, software. You're in it when it's at Bain Capital. Where are you seeing the most value at the moment? Because we do see price points at a very lofty level across any industry group right now. Absolutely. I think any industry group price points are high, and they're especially high in tech. So we've done over 150 tech deals through bad cycles, good cycles. We've done chip deals. And the key is really focusing on where we can transform a company and really fundamentally change its trajectory. That can outweigh the ups and downs of pricing, and that can allow you to buy companies in these kind of frothy markets. So, for example, buying two companies at once and putting them together and getting synergy. Trying to grow a company through multiple acquisitions, trying to grow a company through going exporting rather than just selling domestically. So we try to be very disciplined in these markets, and so far that's been successful. Our funds have done well. But I would say our word right now is to be disciplined and kind of stick to our knitting, to use our folks. And we were really founded as a group that can help management teams develop strategies and grow companies. And we're just going back to those roots even stronger in each vertical market that we have. How does the environment affect you in terms of, you know, at the moment we're all talking about data, about privacy, about the way in which maybe companies monetize that. How does that affect the way that you then look at assets, and particularly in the internet and software space? Well, it's certainly an issue with any internet company that collects data. And if you take one step back, almost every business is a tech business now. Yeah. The technology in this period, I mean, I've been doing this for 30 years, and this period has kind of revolutionized, or at least evolutionized, every business that we're looking at. We actually spent an entire day with our global partner group meeting with the Gartner Group to discuss technology trends and how they affect industrial, how they affect banking, how they affect technology companies, how they affect consumer companies, and the game has changed. So every investment you do, you need to factor that in. In terms of the privacy issue, that's an important point as well. I think the companies are responding in a good way to kind of ring fence that in. The positive of having data is, for example, I like getting customized ads for the things that I like.
Yeah.
So if you can do that in a responsible way, which I think companies are trying to do right now, and work with the government to do that, I think that'll be good for everybody.
Let's talk about the government and how that also affects the way in which you invest. I mean, there's assets that you've looked at in China in particular. When you have these sorts of geopolitical risks or trade skirmishes, how does that affect your willingness to do business in a country like China, for example?
Well, we've been very successful in Asia and China in general, and we think the long-term view is it's a great developing market. We think China is coming towards the world economies and not going against it. They are implementing more rules that are favorable for investment, and so we're hopeful that the ongoing discussions will result in even a better climate. But you certainly have to weigh that in, and you have to pick your spots on where you think you can be successful and not successful. So we have a great on-the-field team in China who understands all that, and we've been successful because of that. The
spots that you can be successful. Where are the spots that you can be successful right now when you're sat here in Boston, when you're looking at opportunities? Where's exciting you?
Well, in Boston in general, about 40% of the people in Boston are involved somehow in innovation. We've been very fortunate that we're at the hub of innovation. You see things going on at Harvard, building an engineering school. Companies here, we have a company, VM Turbo, that's really growing very rapidly through our venture fund. So we're looking at all things of how the internet affects companies, how you can add value there. So certainly technology is a hot and growing area from a venture perspective and from a buyout perspective. But what you have to factor in is what do you have to pay for these companies? So I could tell you hot spots here and hot spots there, but if you're paying too much, you're not going to make a return. So we again try to take that disciplined approach where we find a company that can be transformative, really reduce costs for a company, give them better marketing materials, whatever, and then we invest in those companies to build them and grow them to kind of be immune to the valuation issues right now.
How difficult when you have such juggernauts come into the space, particularly in venture, for example, SoftBank's Vision Fund, $100 billion to put to work. Do you feel that they're disciplined themselves? Are they what's driving the frothiness, or is that something else?
Well, I think in general the economies of the world are doing well. We've come out of the crisis in 2008. The banks are totally stabilized in the United States. Every restaurant you go in is full. Every plane you go on is full, as you know, traveling around. So we are in a pretty good situation on the face of it economically globally. So SoftBank is an issue. It's really not for us. Our venture funds are smaller. They can be more selective. SoftBank is trying to make very large bets on companies that are going to try to gain share globally. So it doesn't affect us as much per se. What really affects us is, in general, there's a lot of money, chasing deals. And so I come back to our theme song, which we'll say over and over again, is to be disciplined and to stick to do what we know, which we've been doing for 30 years, finding companies that can grow, take share, and become larger.
Do you look at the economies as they grow? Do you think interest rates changing, could that affect the frothiness? Could we start to see assets pulling back in terms of valuation? I
think we will see a pullback if interest rates go up dramatically. I don't foresee interest rates. No one can predict interest rates, but if you look at the situations in most of the world economies and governments, there's a lot of debt out there in the governments themselves. So, for example, our national debt is $20 trillion now. I think when I came out of business school, it was $1 trillion. If interest rates went back to the levels of 5.5%, that's $1 trillion onto the deficit. So I don't think many governments can afford to have high interest rates. So I would see a prudent approach would be raising them very slowly, and hopefully that'll mitigate a large pullback. But when they go up, inevitably, valuations go down.
Interestingly, you've just launched a real estate team, I understand. How's that affected by interest rates going up slowly or indeed dramatically? What's the focus there?
It's really the same issue. Real estates are more stable assets. We've had a great team come over to Bain Capital from Harvard, who's been a top performer for the last 10 years. It worked out great for both sides. We're very excited about that team. And again, they're going to be selective. They stick to specific niches that they know about. So, for example, funding biotech office space, doctor office space, things that have demand and will last the test of time and maybe withstand some of these interest rate increases.
Excited about teams at Bain and excited about certainly teams called Celtic. It's wonderful to have you here.
Been very fortunate. I don't think we've ever had a better team at Bain, and certainly the Celtics team is just working magic every night, and hopefully the magic will continue.